don't trade in the afternoon. One or two a day, more than enough at that time. So that's how I force myself to wait and just to wait until I think it's a good trade based on the 5 steps and everything. Then I enter lor. So sometimes it can be quite frustrated if I look, then nothing, then I just close the computer and go to sleep. That's what I do.
So you don't leave your trade overnight?
I try not to. Usually I'm not the kind of person. Usually last time when I first started, I leave trades overnight. I cannot sleep on. I will be thinking about the trade. So I don't trade. Nowadays I do if I think there's a possibility that the week it will continue to go with the trend, and I do so. But usually I don't.
Okay. Understand. Oh.
Okay. We get started.
Yeah, let's start.
I've actually been recording before, so we have a bit of a chatter from just then. All right, so let me just mute John. Okay. So it's the 9th of April, 11:12 a.m. We're doing our currency call, daily currency call. Today we'll be talking about the yen, everything about the yen, and also because Ho Soon there with the mask on, headphones in the office pretending like he's working, he requested for gold as well. So I've added in gold to the analysis today. Give me a thumbs up, Ho Soon. A secret thumbs up. Yep, there you go. So we're looking at yen and gold, pretty much a reserve currency, reserve commodity kind of outlook today. Some people were asking about oil. I'll be talking about that tomorrow. Okay, tomorrow is CAD and oil. So let's get into it. First thing, oh wait, let me share, make sure I share my chart. If you can see my screen, my chart, give me a thumbs up. Awesome. Okay, if you have any questions, while you can put it in the chat, I will also be quite happy if you want to unmute yourself, I think by pressing spacebar or clicking something, and then just asking me that question through voice as well, save you the typing, might be easier and faster that way. Okay, so first ones we look at is USD JPY, US yen. I have it on the daily chart here right now. So why I'm looking at the yen pairs today, as I mentioned, it's quite a reserve currency. Yen is a reserve currency. So what a reserve currency means is that when there is uncertainty in terms of a financial, economic uncertainty, when there is uncertainty, for example, war, or now uncertainty in terms of what's happening with the virus situations globally, people tend to move towards reserve currencies. Example of reserve currencies is yen, which we're talking about today, and the US dollar. Okay, so these are the two reserve currencies. We have gold as a reserve commodity, which we'll be talking about later on. So US yen has actually been quite important to look at. We've seen that the US yen has gone through a lot of volatility in the past couple of months, mainly because of how the virus has been playing out globally. So straight away, I'm going to put a line. I need to draw my boundaries of where the highest point I think it will likely go, the lowest point where it likely will go. So I've got my lowest point here at 102.35, the way lowest point, which is very far away, to be fair. The highest point here at 112.00, round number 112.00. So these are my two highest point and the lowest point right now. Obviously, this is a very, very big gap, about almost 1,000 pips apart. I need something in the middle. I need something to give me more boundaries, more space, more sense of where it could go. I'm looking at something maybe quite in the middle here because it's bounced off this area, a bit here, a bit in this area as well. So at about 107.40, 107.50, that kind of level. At this point now, how I'm drawing my lines is very rough and ready. I'm just putting in rough estimates of where I think the places can be. I wanted to look at it and go, okay, what's the overall view of the US yen at this point? So we've seen in late Feb, it came crashing all the way down as we found out the impact of the virus. It shot straight back up as US dollar got stronger, and then now it came back crashing down again because of the US being impacted by the virus as well. So right now we see it sitting at 108.92, at about 109. At this level, it's really going to be either, okay, actually I'll put it up to you. I'll put it up to all of you here sitting here. Do you think that at 109, is the US yen likely to be moving up towards 112, or is it likely to be moving towards 107 and lower? Put it in the chat. What do you think? Towards 112 or towards 107? I'll give you a couple of seconds to do that. I forgot to bring up my chat. Okay, there you go. Anyone going to comment in the chat? Okay, Kenneth says 112. Suyun says it depends. Everyone's picking up on that trick. Louis says depends. Anyone else? Oh man, Kim Hong says depends as well. What does it depend on? Okay, fine. I'll pick on Kim Hong then. If you're going to say it depends, Kim Hong, if you can unmute yourself, what does it depend on?
Can you hear me?
Yes.
Hello, hello.
Hello. Hi.
Hello. Can you hear me?
Yes, I can hear you.
Okay, cool. So, okay, if let's say the coronavirus impact on the US carries on to worsen, then yeah, chances are the dollar will actually weaken further. But I'm not sure if it's going to go down to like 107 or something. But yeah, it will definitely weaken. But alternatively, if let's say the number of deaths and cases decrease, then it may actually go up higher. As you can see that right now it's actually ranging. So either one of the market participants are actually waiting for something to happen, something positive or something negative to happen. And today's OPEC may actually have some impact on this dollar yen pair as well.
Okay, thanks for your good couple of points. So we're looking at, again, the impact of the virus, possibly the outcome from OPEC. Okay, so one thing I wanted to add on to what Kim Hong was saying, he says that if it does drop, it's not going to likely drop towards 107. Actually, from my point of view, I'm looking at it as 107 is really not that far away. With how the market has been moving, that few hundred pips move nowadays with the volatility, 107 is really quite in reach, quite possible. So I really urge you to, when you're trading, to really beware of that volatility, to be careful of how quickly it can drop as well. So remember, always put your stop losses in there. All right. So my view of where the US yen, it's really going to be dependent, one, on the virus, and also tomorrow, let me just check, tomorrow is Friday. So Friday, we have the US CPI number as well. So because of those two things, and we expect US CPI number to be relatively negative, not as good as it's going to come out to be, we could see that the US yen could drop further. It could drop towards 107 and beyond. So I actually looked at a possible downside towards for the US yen, right? But that's on a very broader term view on the daily chart. So let me get into the smaller term view. So, I wanted to just touch on the daily. I want to pay a bit more attention from now onwards to the daily view, especially for a lot of investors out there who are looking at longer term charts, longer term outlooks of the market. So the daily view is where we really get a longer term view of the market. For the traders in us, we start looking at the H4 and also the H1 time frame. All right, so on the H4 time frame, it actually starts looking a lot more interesting. What do I mean by interesting? We're looking at the US yen sitting in the past couple of days. It's really been sitting in that range. It's been sitting very tight. What I actually think is likely to happen in this case is that because it's sitting so narrow here, we're waiting for something to happen. Like Kim Hong just contributed as well. Everyone's sitting there waiting for something to happen. What's likely to happen is it will be a virus news, or it will be because of the CPI. Most likely, I believe that we could see it drop towards the 107 level again, right? As what it previously did, drop towards the 107 again, with maybe at this point next week, we could either see it drop further or go back up. But I think at this point, this one trade at 130 pips will be something to pay attention to, rather than to consider the next move so much. I would be more interested to look for that first move from 108 to 107 as a 100 pip move, with maybe a 60, 70 pips stop loss. So I'm limiting my loss level at about 60, 70 pips with a good 100 pip move downwards. Okay. At this point, do I think that it could go up? Possibility is there, but if it does go up, I'll probably be sitting out waiting for a selling opportunity rather than to look for a buying opportunity in that move. Okay, so I'll be looking for that move downwards instead. Okay, if I brought up my chart, brought up my news, just wanted to share this with you. Can you see my Forex Factory there? Yep, good. So you can see that today, not much news specifically for the yen, but we do have OPEC meetings happening all day. We do have a Euro monetary policy meeting account at 7:30, and then we have CAD employment numbers at 8:30, and then, this was a bit unexpected. Okay, so we have Powell speaking, but it's probably not going to move the market. It's not really talking about policy, but we will see what happens there. So nothing specific so much about the yen or gold. So at this point, still looks to be okay. On Friday, we have Good Friday holidays, and then the CPI number, which might impact the yen as well. So because of that, bringing you back towards my chart, I think that view on H4 is likely to be quite valid. Any questions on the yen, on the US yen so far? Nope. Okay. I'm wiping my nose. I've just got sinus. Don't worry, I'm not sick. All right. So moving on to the next yen pair, we look at the euro yen. So yesterday we looked at the euro. Today we look at the euro yen. Again, on the daily time frame, you can see that it has a similar pattern to what the US yen was doing, just on a bit less volatility. So straight away, I'm going to put in my lines on the euro yen. That's my lowest point there. I've got some tails sitting there. My highest point at about 11250, that point there. So between these two areas, I got about 600 pips. Probably should have another line somewhere. Straight away, I've got something there because of this point moving across, right? So how I'm looking at the euro yen at this point is that on the daily time frame, we see it been moving in that range quite strongly. What's likely to happen because of what the euro has been doing? Euro has been sitting there, not doing that much. We could see the euro yen maybe creeping up slightly before turning back down again. So on a bigger time frame, I think that it could creep up before turning back down again, trading within that range. Okay, so not big movements in that sense. For the trader in us, I'll be looking at H4. Again, you see that it's been in that range. Our fast MACD is crossed down. This one is getting ready to cross. So because of this, I actually do believe that we could see it move slightly upwards before a overall downward move. You know, so let me just see. So we could see that happening. I don't think that this is going to be a very exciting pair to be trading at the moment. I can tell you that personally, it's not even ranking very high on my watch list as well. So it's not something that I pay a lot of attention to. There's so many other currency pairs to be noticing. Okay, so that's why I'm just really going to touch on that. I'm going to move on to the to the pound yen. That's actually going to be a lot more interesting in the pound yen. Why? Because we've seen a lot more volatility in the pound yen. What happens to the pound yen is you can see just from this view quite a distinct pattern in the pound yen. All right. What I mean by quite a distinct pattern in pound yen, you see that it quite often moves in a range before a big move upwards. You know, it moves in a range before a relatively strong move upwards, or it moves in a rather tight range and then a big move downwards. So this is on the daily chart. Remember, this is on a daily chart. So although the range looks like it's quite tight, it might be quite significant, but you can see moving across before a big drop, moving across or before a big move upwards. Again, another good example here. This is not perfect, but you know, it's moving across for that big move downwards. So what we've seen with these patterns here is that we've seen a big move upwards. We've seen a small development of a range here, not as significant as what we've seen in the previous 4 examples that I've just highlighted to you. But in this example, it seems like something is developing. We see a little bit of an upward move happening in the pound yen at this point, you know, so I'll be a bit more cautious, but let's go through our standard approach, which is drawing our lines, making sure that we have our boundaries for the pound yen. So at this point, my lowest point is here, right? I've got here, I've got this point here. So I've got 12650 at that level. I've got my highest point here at about 14750. Obviously, it's very, very far apart. I need some lines in the middle, right? So I've got maybe a line there because of this point, this level is here, this level is here. I'll move it slightly. Okay, so between these two, I've got still quite a significant level, and maybe something here as well. Well, I've got a couple of lines in the middle here. So you would see with pound yen, we're going to have a lot of lines because it's reacting to so many different levels. That's actually one of the questions that Robbie asked yesterday, and I deflected it off today. Yesterday, Robbie asked, you know, hey, Jin, how do I draw my lines on the pound yen? Robbie, I haven't forgotten about you. So, you know, the question was, you know, it's always been about 80 pips plus. How do I draw more lines? At this point, your pound yen will have quite many lines quite closely together. It would look similar to this. So at this point, we see that pound yen is at 135.40, 135.50 level. It's at a resistance. Is it going to break or is it going to come back down? We really don't know at this point. It really depends on what the pound is going to be doing, which we spoke about yesterday. Going to the H4, look at the shorter time frames. It's sitting at a resistance as we've seen in the daily chart. I believe that we could see a small move upwards, very small move upwards. So what could happen is we could see a very small move upwards before that move back down again. All right, so testing that resistance before a big move downwards again, a relatively big move downwards again. So in the pound yen, I actually see quite significant opportunities to be trading this pair, especially as we keep watch of how it reacts to this resistance level. Okay, so just to further elaborate on Robbie's question, at this point, my lines are about 400 over pips apart. You could still put in lines in the middle of those, and then there'll be about 200 pips apart. So you shouldn't have too much of a problem drawing lines, even on the H4 time frame there, Robbie. If you do need help, reach out to any of the coaches. I'm sure they'll be quite happy to guide you through and review your lines as well. So one of the questions Suyin dropped over to me. Let me just bring that up again. So I'm quite happy that people have been pinging me with questions. Let me just find it. I know the question in general, but I just have to make sure I get it right. Okay. How to identify a fake breakout? She lost a trade in M15 when a sudden spike came out. Okay, so one of the ways I would really suggest to avoid a false break or to prevent yourself from entering on a false break is if you're looking at any chart below the 1 hour time frame. All right, you're quite possibly only focusing on that 15-minute chart, only focusing on the smaller time frame. You forget to check the bigger time frame. So look for the candle to close on the 1 hour. Look for the candle to close on the 1 hour to really identify whether it has broken a resistance zone or not. Remember that as we trade, we're not looking at that one line. As much as I have that line there at 135.43, we're not just looking at 135.43, we're looking at that area as well. So I haven't drawn areas in there, but think of it. Remember that you're looking for that areas there, so you want to pay more attention instead of just that one line. So 2 tips to avoid getting caught in a false break. One, look at the bigger time frame of at least 1 hour time frame. If you get caught on a smaller time frame, quite likely is you've seen that spike up, you jump into a trade, and it comes back down because the candle on the bigger time frame has not closed yet. 2 is remember that you're trading with the zone, not just one line. So normally what happens is when it breaks that one line, it breaks that one price that you've been watching for the past couple of hours, you get so excited, you jump into a trade and then you go, oh wait, what's a false break? So you really want it to clear that zone before you get into a trade, before you jump into a trade. So that's the one. And then the third one I would suggest is if it's a false break against the trend, then be extra careful, right? Be extra careful. Straight away, I can identify this point here. Can you see my mouse? I'm just checking. Yep, okay. So at this point here, if it's been coming down and then it's been shooting up and you go, hey, it's broken outside of my zone, can I buy at this point? It's going counter trend, right? So I'll be very careful if you're going counter trend and then there's a break above the resistance. You're going to go, wait, it needs to break a lot more before I get into that trade, because if it's going against trend, most likely it's going to reverse back with the trend again. So if anyone bought at this point, they would have been caught in a false break before it comes back down. But it's actually not so much a false break. It's a mix between a false break and a counter trend trade as well. So similarly here, if it breaks out, I would still be very careful to buy, because the overall trend has been down. The short-term trend has been up, but overall trend has been down. So if it does break up above this point, I'll be a bit more careful. I'll be looking for it to come back in before I'm looking to sell again. So just a recap again, how to avoid a false break. Look at a bigger time frame. wait for the candle to close. Try not to do that counter trend trade. And then last one I would say is have that bias, know what you're really looking for. Okay, so any questions on the yen pairs so far? We went through, actually quite quickly, I went through the US yen, I went through the euro yen, I went through the pound yen. Any questions so far? We have quite a few, I see quite a few new names joining into this Zoom call. I'm quite happy to have newcomers in here. If you are totally lost, reach out to any of the coaches. We have Daniel there. Raise your hand, have a wave, Daniel. We have Jonathan there, have a wave, or do that. We have Kenneth. I haven't got Kenneth on my screen here. Well, Kenneth is at the beach. I'm sure he's still available. We have Chiwe in the shadows today, the man in the shadows, right? So reach out to them. I'm sure they'll be quite happy to help you with any questions you have. Alternatively, I would also share with you what we do here. Just let me bring that up quickly. Can you see the LCMS Traders Club? Thumbs up if you can. Can you see my Facebook page? Okay, good. So alternatively, if you have any questions as well, head to the LCMS Traders Club. It's a private group where we have only our students and our clients in there. You request to join, where we'll be sharing. We've got the currency analysis, and that today Daniel has been firing out high quality signals. So you can get the signals in the Telegram channel. You might tell me that, but the Telegram channel is really there just for you to blindly close your eyes and follow. But a lot of times right now, especially when you're stuck at home, you don't want to just blindly follow. You want to learn, right? We've got the new guy here who said he's finally with time at home, he wants to learn a skill. In here, Daniel also puts in his analysis of why he chose to enter that trade. And you can see that there's been quite a good discussion of support resistance lines, why they enter trades, looking at indicators and deciding when to get out of a trade as well. That's one thing we don't tell you in the Telegram channel. We tell you in this private group of why we get into a trade and when we get out of a trade, why we're getting out of a trade. We got members sharing trade ideas of how they want to get into a trade, why they want to get into a trade, and then coaches sharing their views of what to look out for, things to pay attention to. I have a question here from Robbie. I remember I told Robbie to pay attention to his risk reward. He wanted me to, I'm sure, explain this in the next session, which is today. So Robbie, to answer your question, when you posted this chart up, I said pay attention to your risk reward. Why I highlighted that quite quickly was if you did enter a trade at 0.598, your target would be about 0.6, but then your stop loss would be at about 0.5930. So just a rough measurement, your risk is going to be a lot bigger than your reward, right? So we can sometimes take a little bit more risk than reward, but in this case, through our analysis, we were talking about, analysis looks okay, but it was a little bit, at a resistance level. It was approaching a resistance level, so we had to be a bit more careful on that trade. Robbie, are you still in the call? If you are, can you either reply or leave it in the chat? Does that answer your question on the Facebook post? All right, awesome, Robbie. Good. All right, so coming back to this Facebook group, this is how we want to really build and guide you through your trading journey. Got questions, put it in there. I'll answer you through a call or straight away on the comments. We have Roy sharing his trades, identifying why support resistance zones and stop loss and take profit levels. So this is going to be quite useful for anyone in their trading, who wants to take their trading seriously, you know, you can do it alone, but if you do it alone, what we find is that you're gonna get lost most of the time. So you do it in a group where you share your ideas, and we really can coach you through the whole process, right? So it's LCMS Traders Club. Hit there. You can join us in the group as well. Okay. So at this point, we're going to look into the next currency pair, next pair, which is what? Gold. I see Kenneth almost mouthing the word gold. Yep. Thanks, Kenneth. Gold. How many of you trade gold? Can I get a thumbs up, hands up if you trade gold quite consistently, quite often, if it's one of the commodity pairs that you trade? Right, no one's answering, so I'm not going to talk about gold because no one trades gold. No point analyzing it if no one trades it. Okay, that thread didn't work. I'll still analyze gold because I like it as well. All right. So looking at gold on the daily time frame, one advice before we get started is I would suggest that you don't trade gold on anything on the H1 or lower, right? Gold is very volatile. Why I say it's very volatile? It's a reserve commodity. That means people buy gold in terms of uncertainty, but also there are many contributing factors towards the price movement of gold. What are the contributing factors? Such as, well, we said uncertainty already, we said the strength of the US dollar, even sometimes oil prices will affect gold, you know, even the overall movement of other reserve currencies or other currency pairs could affect the prices in gold as well. So I'll be extra careful trying to pick very short-term moves in gold. So I will be looking at it on a daily time frame. First thing I notice is that gold at previous highest point in early March was at 1692. I would even round that up to say 1700. All right, so it's at highest point of 1700. We are currently at 1650. So it's quite, I would say, quite close to the highest point. Straight off the bat, I would jump to that conclusion, the interim conclusion of saying that top side is quite limited, right? It's going to take quite a bit for it to break above 1700. Can it break above 1700? Very possibly, but it's going to take quite a bit more for it to break that level, right? On the downside, significant lowest point is 1460, 1450. It's quite a range between 17 to 14. So I think we also have an interim level at about 1550. So we have three lines, or even 16 actually. Yeah, I'll be quite happy at about 1580. So we have those interim lines of 1007, 1580, and 1450. With my bias of top side being possible but limited because of 1700, I think that it might actually go up a little bit to test that level again before coming back down, right? I'm not sure if you have seen my post. I'll share it again in the private group where I described and explained a bit more about why gold is not a perfect hedge in this scenario of the virus situation. It's not a perfect safe haven for this situation. So I see that sentiments are likely to push gold a little bit higher before the realization, and then it's going to come back down towards the 1580, 1600 level again. Okay, so a very quick broad view of gold in that sense. Another reason why I think that gold is likely to come back down is I see my fast MAC indicator looks like it's likely to cross back down again, although the slow one is pointing up, which is why I anticipated that it's probably going to go back up a little bit more before this cross fully develops to come back, for prices to come back down again. Okay, so very broad view on gold. Any questions on gold at this point? Ho-Soon, I'm looking at you. Any questions on gold? He's happy. Yeah, either he's typing or he's happy. 0.1 is 1 pip. Well, gold calculations is going to be, it also depends on what size you are trading as well. So you want to be a bit more careful in terms of your gold, in terms of your leverage as well. So yeah, gold prices is 0.1 is 1 pip, if I'm not wrong. Yeah, it should be. Okay. Any other questions? The difference of our support reasons are about 1200. Should we put more lines? I would avoid putting too many lines. Again, I'm looking at gold on a daily time frame, so my lines are very wide apart. If you were to trade it on the smaller time frame in the H4, you could have a few more lines, but I think that having a few more lines here severely complicates the charts, which is also why I advised before I started the gold analysis is that you shouldn't be looking at gold to be actively trading. It's something that you want to get in and hold on for the medium to longer term, trending towards the longer term view rather than medium to short term. That's why I tend to try and keep my gold lines a bit further apart, go for the slightly longer term play. Does that make sense to you, Robbie? Awesome. Any other questions? Lewis is uncomfortably quiet today. Not in the shadows and quiet. Okay, good. Okay, so I'll put an end to this now. If this will go up later today, if you have any questions, look through the video again, leave it in the comments on Facebook. Check out my profile because I'll keep adding on to the analysis in there on a day-to-day basis. If you have any questions, please reach out, let me know. I'll be quite happy to answer your questions as well. All right. So in the meantime, as what I always say, trade safe, don't overtrade, keep your size correct, stop loss, take profits. I'll talk to you again tomorrow where we look through CAD and also oil prices. Take care now. Bye.